All right, traders, good afternoon. This is Christian from Hertz Tribeca Trade Group, and it is Friday, just a little bit past 4:30 on Friday, January 17th, end of the week video. I always like to do these end of the week videos just to kind of summarize the performance, some of the week's events, and just overall just summary before we head into the weekend. So first off, what did we have today? Basically chop ahead of a long weekend. That's been, even though today is Friday ahead of a long weekend, right? Markets are closed on Monday. It felt a little bit more like we've been seeing the last couple weeks, like just a lot of chop on Fridays in general. They've been kind of difficult to trade the last few Fridays, but it is what it is, and I think it's just indicative of having a really nice week of performance, and probably people are just not pressing into the weekend. There's no real need to do that, and especially over a long weekend. Not that we have any events or anything like that that are specific, like global tension type things, but I think just overall traders just would rather lock in some profits before the weekend. And that's what we talked about in yesterday's video, right? At the end of the day yesterday, I said that that was my feeling going into today, that we've had one hell of a week, and it's probably going to be a dud of a day, which I think that's kind of what we got. Interesting to, if we just recap today's performance, I mean, the Qs actually finished up, believe it or not. I'm calling it a dud day, but the Qs did finish up 50 basis points. I think part of that is also that we closed right where we opened. For the SPY, the Qs, the diamonds. Again, I try to say this as many times to share some things that I've learned over time, but just again, a lot of times it is. Now, yesterday was a little bit different because we rallied, but a lot of the moves happen in the overnight market, right? So we've rallied basically almost every overnight session this week, and Sediment Trader has put out on, I believe that's their handle on Twitter, but they've put out great data over. They put this tweet out maybe every once or twice every couple of months, just about how the overnight market, you could make a lot more money in that versus basically starting your position on the open and selling it on the close. So starting your position on the close and taking it off on the open. Now, of course, you could do a lot of different day trades during the day and so forth, and try to capitalize on certain things. But if you were just to put that trade on at the end of the day and buy at the end of the day, sell on the open, that is much, much more. I'm talking like exponential, 100 times over, much more profitable than doing it the other way, buying on the opening and selling on the close. So anyway, that's kind of what we got all week long. We had obviously a couple days like yesterday where we really rallied at the end of the day. Interesting, the small caps, I think we had 3 or 4 days of outperformance, and then they finally came in. Where did they come in? Basically right where we said, right where our market webs indicator told us. Again, this is something that I went over all week long. I said that we could basically rise up to that level. We did take that out. We'll see what happens. Once, now that this is taken out, it's a place to take profits. I say it all the time with these version point of controls, especially linked once we really pop up to one, you take profits up here, right? And again, the market web's giving us some excellent levels to do that, right? Otherwise, you just wouldn't know. You would think, hey, maybe the small caps are going to break out completely to new highs. Now, they may do that, but it's, as you could see, we basically took out this level, and we're coming back in already. So again, we'll have to watch this on next week to see if there's any continuation. Again, it's not 100% of the time where we rise up to that and then sell off, but it happens quite a lot. It happens quite frequently, and again, gives you a great sense of where to take a profit. Right? I mean, look at this reversal down here off of this one. All right, I always give examples of these. So that's the small caps for the day. I thought that was quite notable. That was in the beginning of the day. They did finish down 30 basis points, but again, they were up. They started the day up and gave it back. What was the biggest performer from open to close was transports today. Besides that, and they remember there was 4 transport companies that opened up down: KSU, CSX, EXPD, and JB Hunt was the other one. If I'm leaving one out, I apologize, but there was four companies. KSU had a nice reversal to the upside. Uh, really performed very, very well. So big reversal in that one. Utilities. I mean, utilities. It's pretty amazing. I know. We talked about utilities. I think maybe on Wednesday when this thing broke out. But look at the breakout. You got an inverted head and shoulders up here, and a breakout of the neckline. Very, very strong. Somebody asked me. I don't have Bloomberg up right now, but somebody asked me like, which is a great question. Is that a bad sign for equities? In my opinion, no. It's not exactly as intuitive as you think. You would think utilities rallying is risk off, but if you look at the relationship over the last 10 years, there's basically, and you plot the XLU over SPY. Again, I would show you this in Bloomberg. I just don't have Bloomberg up right now, but it's basically almost like a straight line. They kind of are moving together, believe it or not. And I know that's kind of counterintuitive to what you might think. Utilities breaking out is, risk off, but it just is what it is. These utilities, I guess some people feel more comfortable having something like that. USMV is another ETF that's been breaking out, right? I think a lot of people thought, including myself, that this had a chance to break down. This is minimum volatility equity. So yeah, there's some utilities in here. There's also healthcare. There's also things like Visa and MasterCard, I believe. Some financials that are in here as well. But look at this thing break higher. So again, that's not, to me, doesn't indicate that we've got a complete risk-off market. It just means people feel comforted in those types of companies. So again, impressive. No breakdown in this, and a lot of these areas of the market that we're digesting for 3-4 months are breaking higher. So interesting that's going on right now. Also, it just could be as well what I think, right? Which is that into earnings season, people are maybe a little bit worried about valuations and maybe going into some things that move a little bit less, hence minimum volatility, even though it's exhibiting uh, momentum. That's another thing. What performed badly again this week is the oil and energy names. Biotech was down 1.4 this week, but I think that was mostly early, maybe very early in the week. Actually, today they did not finish well. They again having trouble with the top of value. Finished down 80 basis points, and again, the healthcare is a decent portion of the IWM as well. But yeah, interesting. It doesn't look like it finished down for the week, but today's Friday, Thursday, Wednesday, Tuesday, Monday. Maybe from where we closed. Huh. Let's see. Yeah. All right. Well, is what it is. Yeah. So I wanted to just talk about energy for a second. I like to sometimes just talk about things that a lot of people aren't talking about. But XLE, I made a comment on Twitter this week about how names and downtrends, just basically, it doesn't have to be downtrends, but just things that are trending continue to trend for longer than we can imagine, right? No one can ever pick when a trend is going to stop. And sometimes they go farther than we think they're going to go. I've talked about before, just not messing around too much in energy. I've tried, maybe once or twice in the last like 4 months for something for energy, but again, they continues to fail at the 200-day moving average over and over and over. So I don't know what will get this over. The last couple times we've had these things move on global tensions, and then complete fades. Right? We talked about that in oil. This version point of control, again, just like I was talking about with IWM. Here's another good example of one on a reversal on a VPOC. Reversal on a VPOC. What is not, so again, this thing, so I always go back to trends, right? I don't talk about this in every video, so I'm going to talk about it in today's, but I mean, look at Palladium, for example. Palladium, you probably would have said, oh, sell it. It's high. Well, it just continues. Every dip in this thing gets bought. Is it stretched now? Absolutely. It almost looks like a little bit of a blow off top at this point. But I mean, this thing has been trending now for a while. So we'll see if it gives you another opportunity. If it comes in, really hard, maybe down to, even down to here would be great. That would probably be another buying opportunity. But phew, just a case to follow trends. Just don't know how long trends are going to last, and that's a pretty darn good one. All right, so that's a couple things from today. For the week, I do have the week's performance up here. I could tell you, these are major sector ETFs for the most part. One that's not pictured here is small cap healthcare that actually performed the best this week, up about 4.5% for the week. But the home builders up 4%. We talked about them a lot this week. Caught that early, the breakout early in the week, a break above value. Played a couple names. I took off KB. I had KBH on. I had two home builders on this week, as well as Home Depot. I took off my Home Depot today. I did not roll it. I was going to roll it, and I said, you know what? I don't really. It's an excuse for me to take some risk off the table. But I made this wasn't a huge winner, but KBH was a nice winner. I bought after this little bit of a sell-off after earnings. Did okay. I'm still long TPH. Didn't have a great looking bar today, which is fine if it comes in a little bit. I don't mind re-adding. My target up there is 1687, that version point of control. So nice performance there. Again, good to see some different areas. Whoops, that's the previous spreadsheet. Let me get rid of that. Solar had a big week. This also took out a VPOC, so I took some profits. I'm going to talk in just a minute about what I did for the day. But this is now above the VPOC, so that would be great. I think it's got to continue to go here. Sometimes we do see things rally past the VPOC, and then they fade a bit. So we'll see. Internet stocks had a fine week this week. Again, the utilities, I already talked about them, but they were, on this list third best. But tech, internet stocks, they had a really nice week as well, especially in the middle of the week. Transports did very well. Materials had a good week. Software, and you just go down the list. Even semis, which were kind of bumping around all week long. Some names in the group really performed well. Some other ones not so well. Look at this Lam Research today. Not Lam Research. Lattice Semiconductor. Really nice breakout. We've seen repeat call buying. I don't own any of this one. I've looked at it a few times. I know there's a lot of victory laps on Twitter today because we have seen a lot of call buying in this thing. I was making a joke on Twitter. I said, "What did this thing?" Because of course, it's up 10. It was up at 1.10%, and I made a joke on Twitter. I'm like, "What are they getting in? Are they making plant-based chips?" And of course, like, oh, there's call buying. Like, I'm joking. There's calls. There's been a lot of calls in this name. So this paid off. If you managed to buy into some of that, real nice breakout. But for as many people who are doing victory laps, I hope they own some of the stock. You'll never see me do a victory lap unless I own it. I'm not in the business of, oh, I called it. I'm in the business of making money. So this one, unfortunately, I did not take, but a couple traders in the room did. So congratulations. They even chased. I think a couple people even chased, like, in this move after it was just up a couple percent. Because, like I said, it finished up 10% for the day. So this is a case where you could have chased. I was looking at this here. We were watching it in the room, and then I was just watching it do this, and I'm like, wow. So very impressive move. This could have more to it too, because if you look at the base and you draw it up, we're talking about a $23 stock. So, maybe this thing can get up there to 26, 27 in that region. I wouldn't be surprised. Then robotic stocks. I mean, again, a lot of sectors up over 2% right there. Very few down. The only ones were energy. Metals and mining was fractional for the week. But even like your worst performing U.S. sectors were the banks, which were up 1%. So very strong breath this week, no doubt about it. A lot of participation. We saw a lot of those, beaten up stocks rally throughout the week. A couple days here and there. Newer IPO names that have been somewhat, got beaten up partially in 2019. Really had some success and rallied throughout the week. International performers, you got again bunch of names over, 2%. It looks like emerging markets did pretty well. You could see on the top line, by the way, I've got, even with small caps selling off a little bit today, they still finished up 2.5% above the Qs, which was up 2.3%. But again, very strong week overall. Emerging markets did fine this week, up 1.4%, so tacked on some gains. Gold, bonds, basically unched for the week, and that's now a couple weeks that they haven't performed great. I still think gold looks fine. Remember this thing got like to an 86 RSI on the daily. So once that usually happens, it gets a little bit too heated, and it's kind of putting in a little bit of a bull flag. We'll see. I've been saying that now for a while. The best thing that could happen is if this gold kind of just sits here and digests, and then can maybe position for another move higher. Remember, at the end of January, there's another like Brexit type thing going on, so that may get gold going again. All right, so I wanted to talk about. So that's kind of the summary for the week. So what did I do? Just basically things that I've talked about. I did. I'm no problem showing you by portfolio, but I actually added a little bit of cash. So this is the tactical portfolio, all stock, follows trends. I actually added this SHY in there. I'm doing what I kind of feel like. I know like following price is really king, and that's what I try to do. But I know from my experience, earnings season can be a very difficult time. Now, stocks, it may be fine, but I did just take some profits in some of the things that have done really well for me, like Anaplan, IWM, which we put on earlier in the week, which I already talked about that one, Shopify, the solar ETF, Visa, especially anything that's going to report earnings. I don't want that earnings risk. So, BHP had a nice day today as well. That had a target for me. So rather, what I've been doing is either substituting into some other names when I take targets. I decided for now, until for the next couple weeks, I'm just going to have a little bit of a cash balance in this portfolio, right? So that's this SHY. You could see is now the biggest holding in this portfolio, which is now right neck and neck with the performance of the S&P since I started this in August, but it has outperformed the S&P the last couple months. And then also my thoughts on like option trading. I shared this with the room earlier today. Looking at my shorter term options account, making sure that my exposure is where I wanted to get it. Again, I don't have a crystal ball, but I know past earning seasons, really tough to swing trade, especially on the option side. Day trading, you can continue to day trade and things like that, but I find during earning season, the less I trade, the better for swing trading. So my goal for the next couple of weeks is not to give profits back for this first week of Japan. You know what? Japan. My goal for the next couple of weeks is not to give back profits from the first weeks of January. Remember, at the end of the year, we were saying how great the performance was, and we've continued to go on. So I don't want to be greedy here going into earnings season. We've got Netflix that opens up on Tuesday, which I will be customizing an earnings trade for that one. Hint, hint, selling a little bit of premium. But this is the hardest thing to do in the game, right? Knowing when to press and knowing when to sit back, right? And sometimes, even though you're trading, even though you're even trying to trade a little bit less, you just don't want to give back a lot of those profits. That can really happen. I've talked about this already too, but I'm going to reiterate. There's three directions in the market that could happen around earnings season. Of course, we could continue to grind higher. That's one. Two, we could have some, a little bit of a pullback. Or the third thing, which I think is definitely in the cards, and I've seen this before during earnings season, is sometimes we just don't move. And if we don't move, and you're trying to trade a lot of options directionally, you're gonna get hurt a little bit if we don't move. So that's that number three scenario is kind of where my head is at. So that's where I've positioned for. All right, guys. So that's it for the long weekend. We'll have, I'll go through my charts and do my homework as usual. I've talked about that a bunch of times. Doing homework and setting alerts is so much better than just watching the tape and watching option activity. I really do. I think that's paramount to option activity. Some people would argue with me otherwise, but I think when you join the two, that's what we really try to do. And again, try to get into some trades before we get the option activity, like Home Depot. The setups will appear before the option activity. And a lot of times we'll get the option activity and it's late. So if you're putting in the homework and setting the alerts on trigger areas, that's what we'll look to do this weekend, and that's what I look to do for Tribeca Trade Group members. All right, and also we'll be unveiling the Market Web's version 2020 publicly. So I'll have more on that over the weekend. If you have any questions at all, you could always email me or just contact me on Twitter. All right, guys, thanks very much for watching. Have a great long weekend, and I'll see you back in the room.